Well, good afternoon, everybody, and welcome to the webinar for new businesses, where we'll be exploring the critical foundations that are fundamental for business strength and growth. Now, what does this mean, you might be asking? Well, time and time again, we are seeing businesses start with the greatest of intentions, but they don't really implement everything from the start, or they don't do it correctly, which ultimately affects their business, obviously, down the track. We understand business and we understand numbers, so we understand you may be conscious of costs, obviously, in the beginning, which are usually a lot higher, but it's really important to understand what you can do yourself and when it's time to engage a specialist or advisor. You could give me a recipe to my favourite meal. I'll definitely give it a go, but I mean, it will never be the same as the professional chef that's backed with their knowledge and years of experience. But the aim of today is obviously to build your own knowledge and give you the basics of starting up your own business, and at least get you thinking or making you aware of all the key factors, because like I just said, it's so important to get it right from the get-go, or as we say, starting off on the right foot. So I'm here today with Paul Cunningham, who is an associate of Smart Business Solutions. He has over 12 years experience and he's a fantastic accountant and advisor, and he has a wealth of knowledge. I better introduce myself. My name is Erin Turner. I am also an accountant at Smart Business Solutions, and as of July, we are actually both hitting our 5-year anniversary, so go us. We are here today to obviously help you and empower you, and if you have any questions or come out of today realising it's time to engage with an advisor, please do not hesitate to reach out to either of us. But we're just going to jump into the agenda for today. I understand there is going to be a lot of content here, so the aim is to really highlight important areas for you all. So do take notes, and we do encourage you to actually ask questions along the way. So you'll see a Q&A chat box in there, so just jump in and put in any questions that you have, and we'll either answer them as we go along or towards the end. So just to quickly touch on the agenda, so we'll be starting off with business structures and tax obligations. And then we'll be going through developing your own business plan and marketing plan, just highlighting those two, I guess, because they can be quite lengthy if you go into too much detail. Definitely going to be touching on how to read your own numbers, bookkeeping, understanding your own risks and legal responsibilities, and of course, hiring employees. So I'm going to hand over to Paul, who's going to kick us off our webinar today.
Thanks, Erin. Sorry, there we go. So I wanted to start off with our business structure. This is the most basic. So obviously some of you I know have already started business, so you may be already in a structure and thought of this. Some of you may be thinking about a business, but it's important either way to always be reviewing your structure to make sure it's continuing to be appropriate for you and your business. So we've listed the main options there. So they're I guess the simple options. So you can be a sole trader, a partnership, a company, or a trust, and I'll go through those in more detail. But I wanted to start off with what are the key considerations that you want to take into account when deciding what business structure you want to be in. So the first one there is legal risk. So a company and a trust are considered, for the most part, a separate legal entity. So it actually protects the individual, the director, shareholder, the business person running the business from potential liability from the business, from issues that could arise in the business. It's not complete immunity from issues, but it can significantly limit the risk. So that can be really useful, particularly if you want to protect personal assets from anything potentially that could happen in the business. Tax minimisation strategy is obviously a big one that we work with quite a lot. So that's really important, particularly once businesses get going and start making some really solid profits. We want to really make sure that we're in the right structure so that we can, basically when we talk about tax minimisation, obviously we're talking about legal strategies, and we're basically looking at trying to lower the overall average tax rate that you pay across a group or across a family group, really. The other key consideration is cost. So when clients come to us to talk about their business structure, we don't just necessarily just set them up in a really just great fancy structure that could have great tax strategies, but isn't necessarily relevant to them, because some of that can be quite costly, and we'll discuss that as well. So we take it into consideration. I'm never about selling something to someone that they don't need. And you can also move from, say, potentially to a sole trader to a company. There is that option to do that at a later date. Obviously, there are some tax considerations as part of that, but that is possible as well. So we'll go through that in a little bit more detail. I do recommend that seek professional advice in regard to your business structure, because at the end of the day, it's very, pardon me, it's very specific to the needs of each individual and particularly their family group. So to make sure that it's right for them. So just touching on this sole trader and partnership. So for a sole trader, this basically just means that you are conducting business in your own name. So you would apply for an ABN under your own name. Obviously, therefore, you're not limiting your legal risk at all. So if somebody was to sue you as the business owner, they're suing you as the individual. So you're then legally responsible for the liabilities in that case. This is the cheapest option. There's not that much in way of ongoing fees or setup costs. It's pretty straightforward. You set up an ABN and register your business name. So it is advantageous on that. In terms of tax minimisation or tax preparation, so there's not really a lot of tax minimisation or tax planning that we can do for sole traders, because essentially the profits from a business for a sole trader will end up in the individual tax return. So the same individual tax return that you would prepare as a salary and wage earner, the profits will go there. So there's limited options there. But again, if there's not extensive profit, then that might not necessarily be a problem, and the lower cost option may be more appropriate. And in terms of limiting risk, obviously there are other options, as well as making sure that you've got correct insurance coverage as well. So it's not that it's never the right answer, but it just needs to fit the particular scenario that we're talking about. Partnership is very similar to a sole trader. Essentially, it's a partnership when I'm talking a partnership here between two individuals, I guess, or two or more. It could be. Essentially, they would lodge a partnership tax return for their taxes, and that profit would be distributed to each individual in the partnership, basically on the lines of the partnership agreement, generally 50-50, but if it's two, but doesn't necessarily have to be. Again, same issues before, it's not a separate legal entity, so we're not limiting risk there when we have got limited options in terms of the way we distribute taxable income at the end of the year. So not as much fun for us accountants to have in terms of tax planning. The other two options that we wanted to talk about are company and trust. So the most common option that we recommend is operating a business from a company. Several reasons for this. First of all, we are now talking about a separate legal entity, so we are limiting some risk there to the business owner. Still need to make sure that we're doing all the right things. We're lodging on time, particularly taxes. Some taxes now and superannuation can pierce through the company and be a liability of the director if things aren't being done correctly. But it does limit the risk somewhat there by having a company. Also, the biggest advantage of the company I find is what is now for a small business 25% tax rate, which is once you start earning sort of profits of about 50,000 as an individual, you're going to be paying more than 25 cents on the dollar in individual tax returns. So that can be a really significant saving that if you leave the profits in the company, particularly if you're growing and if you're looking to have quite a significant business in the future, or if that could potentially be an option, that can be a really good idea that if you don't have to pay extra tax on money that you're leaving the company to continue to grow the business. A family trust is a trust is another option. There are different types of trusts. Don't want to go too deep into this. The most common structure we see for a trust in terms of business is a family trusts. So the benefit of a family trust is that you then have the discretion to distribute trust distributions to family members in a way that is more that can be more tax effective. So you can change it each year, depending on what's going on in the family. You can distribute to children who are over 18, parents potentially. There are the ATO has recently released guidance that's restricting the ability to distribute distributions to as freely as we potentially would have in the past. So that's in draft stage at the moment, but that's still an option. The only reason I don't really like using trusts for the operating business entity is simply because if you've got that money, if you make a big profit and you leave that money in the business, you still have to distribute all profits from the trust every single year. And ultimately, generally speaking, you distribute that to individuals. So for example, if you make in your second year, if you have things go really well, go great from the start, and you make $1 million profit in your second year under a trust, then essentially you're going to be distributing that $1 million to potentially to mum and dad type scenario. So 500,000 each is going to be a lot of tax, and that's whether you take the money out of the business or not. So whereas in a company, that $1 million can be taxed at the 25% tax rate, and we don't need to distribute and pay at the high individual tax rates, and you consider the individual tax rates, once you get over 180,000, you're paying 47 cents in the dollar tax. So you're basically, losing half your money. So whereas if it's in the company, you're only paying 25% tax. So it's a lot better option there. Ultimately, the scenario we recommend is often a mixture of the two, often a trust that owns shares in a company. That gives us the best of all options, really. So we keep the 25% tax rate option, and we can distribute dividends through the family as necessary. But again, when we're talking about these things, it's often best to just seek professional advice, because it's going to depend on each family unit and how it's structured in the business as well. Well, as I mentioned, you can move from one option to another. It is certainly harder from moving to trust a company, but it is possible, or company to trust. Moving from a sole trader to a company as well as it can be, is possible, but there are some tax consequences that we need to think about. Trusts are really good for holding investments and assets, particularly property. You would never buy, or most normally would not buy a property in a company, so that's where that mixture that can come in. I did also want to touch on, pardon me. Cool. Pardon. I did also want to briefly touch on GST and when you need to register, because this is a common question that we have when we are speaking to new business owners, is when do I need to register for GST? You don't need to register for GST until you know that your turnover is going to be over $75,000 for a 12-month period. That being said, you can choose to register early. Some of the reasons you might choose to register early is if you're going to incur a lot of GST purchases or expenses, or if you're buying a lot of plant equipment or assets up front, and therefore you might be getting a GST refund. So it may actually be worth registering for GST early. But other than that, there's probably no reason to really register for GST early, unless potentially if you're selling to, I guess, business to business, and you want that, you don't want to make it obvious to other businesses that you're not quite that big yet. So if you're a bit concerned about that, that could be a potential consideration. Another consideration there is if you are leaving your GST registration till a little bit later on, pardon me, if you're leaving your GST registration later on, just remember that that's going to reflect in an increase in price to your customers. So particularly if you're selling from business to selling to consumers rather than business, so they're not going to get the GST credit back on their BAS statement. So they're just going to see a 10% increase in your prices. So consider how that's going to look in 6 months, 9 months time, and how are we going to handle that, and how are we going to communicate that to our clients who might, even they may understand that that's going to the government. Ultimately, the end result for them is a 10% price increase. I did have one client that we discussed this option, and they just said they were then going to sell their service at the increased price and just not charge GST when it was necessary, so that way they never had that increase in price later on. So, and they get a little bit more money as startup, which is also nice. Pardon me. So we'll move away from that stuff and focus a bit more on your individual businesses. And we wanted to talk about a business plan and also the marketing plan. Obviously, we've done whole seminars or whole webinars on both business plan and the marketing plan, so we can't touch on every single point. So I'm going to touch on the key points here. I do invite you to have a look at our YouTube page, and we've got, so I know the business plan definitely is there. It's a couple of years old now. I think we were in lockdown when we did it. So we do have some content, some great content there. We can also assist in preparing business plans. So if you're interested, please reach out. The reason why we find that business plans and marketing plans and all sorts of planning is really important is that every productivity expert I've ever heard speak basically says that you are much more likely to reach your goals if you write them down, and if you have detailed steps on how you're going to get there. And that's what we're talking about with the business plan. So with the business plan, what I'm talking about is I'm not talking about potentially, some of you might have seen when you download from the bank an example business plan or something on the internet, and it's 100 pages long, and it gets you to think about lots and lots of things, which can be great, but it's not ultimately going to be something that you're going to be looking at every day. So when I'm talking about a business plan, I'm talking about an actionable document that you're going to look at, maybe not every day, but at least once a week. It should be a document that's not tucked in a drawer somewhere and looks really pretty. It should be a document that's sort of on your desk with scribbles and notes and things crossed out and new ideas raised and a bit crimpled from overuse. And that's the idea of what we're trying to do. It's a living, breathing document, and it's a document that we share with others. So if we have staff, we're going to share it with staff. or your spouse or a business partner, you're going to discuss it so that people around you know what you're trying to do, and so that the people that I guess are there to help you achieve your goals, know what your goals are and know where you're headed. So we're just going to touch on a few key points of the business plan. I should mention that our business plans generally are 1 to 2 pages, or 1 page front and back. That's the extent of our business plan, but there's a lot of content on there. So, but we make sure it's meaningful content that we're going to action, and that's content that we need to achieve the goals in our business. So start with the purpose. So the purpose is extremely important. So that's your purpose, your reason for being in business. So what is it exactly that you're doing? So I was having a look at some examples and one example I found was for Tesla. So it's to advance I can't read my own writing. to advance, I can't read my own, sorry. I apologize, I missed it. But basically what I'm trying to say is that it should be a really simple purpose statement. It's, this is what we're doing to advance electric vehicles, or advance sustainability using electric vehicles. So that's what we're trying to achieve there. So it's really just a really simple purpose, and it's really to guide you. And it's something that you should be able to share with your clients, with your staff, to know where your business is going. As opposed to the vision. Now, when we talk about vision, we're more talking about, well, what's your vision for your business? What do you want it to look like? What do you want it to look like for you? And what do you want to get out of it ultimately? So vision, we're talking about, okay, do we want to move from 1 location to 3 locations? Do we want to move from $100,000 sales to $1 million sales in 3 years? That's the kind of vision that we're looking at there. So that's not necessarily something that we're going to expose to everybody. We might expose it to staff, but we might not necessarily share that with clients. But it's really important to have your vision there, and a goal of what you want to achieve. Again, we want to write it down so that it's more likely that we're going to achieve it. So that we start here, what's our purpose, what's our vision, then we go delve into a little bit deeper. Values, but really important in business to have solid values. This is statements of beliefs that really run how you decide to make decisions in your business. So if we're dealing with a problem client, we can go back to our values. Is this against our values or with our values? Or, if we have a question that we have to make, as might be a tough ethical one, we go back to our values and we really rely on that. And we use that to really have a look at, to make sure we're hiring staff that are aligned with our values. So, and common one is, work-life balance. So that's one we have here, is we have work-life balance. Some other businesses may go, no, we don't want that. We just want to earn more money. So that doesn't necessarily mean it's a bad thing, but we need to make sure that we know what our values are, and that our team share our values as well. Your ideal client is really important. We're going to talk about that again in the marketing plan, but your ideal client this is the client that your dream client that you want, that you want to have in your business. So we have, for example, in our business, we have lots of different sizes of clients and different types of clients, and we obviously love and appreciate all of them, but we do also have our ideal client that we want to target. And so I think spend some time thinking about what that ideal client is, what they look like, can be really good, because that's going to help you make decisions in your business of what your product or your service is going to look like, and how you communicate that to clients. Your value proposition is really important. So why is your client or customer going to choose you over your competition? Or why is your client or customer going to choose you over not choosing anything, or not choosing to buy or purchase what you're selling? So what is it? What is it that's going to make your customers take action to buy your product or service? So whether that's a quality of service, whether it can be where we're going to make the cheapest product on the market and make it accessible to all. So I think the value proposition can be different for every single business, but we need to understand, what that is, what our specialty is, and what we're aiming to achieve. We also want to identify opportunities and vulnerabilities. So we want to look at what things are coming up that we can really take advantage of, sort of external things, and also external vulnerabilities. So are we facing, for example, at the moment, we're all hearing about inflation. So are my costs going up? Is that something that's going to affect me? And if so, what do I need to do to address that? Perhaps the most important part of the business plan, and I think this is the part that often business plans don't have, is that you need to have an action plan. So what are we going to do about it? So we've written all these great things about our business. What do we want to achieve? But what are we going to do to get there? So we include with all our business plans a 90-day action list of this is what we want to achieve in the next 90 days in order to help us achieve their goal. Often a business plan will focus on, well, what do we want to achieve in the next year or next 2 years? But let's start off with what do we need to do in the first 90 days? And obviously, once we tick those off, we then start with the next 90 days actions, and we have another list. Really important with the action plan that you have who's going to do it. So if you have more than one person in your business, so make sure you're assigning staff to help you with that. So that's not just you that's advancing your business, it's all your staff and your people around you. And always put due dates on your action plan so that you make sure that they get done. Specific due dates, don't put May, June, put the 25th of May, this is going to be done, and think about, well, if that's a bigger task, do I need to break that down into smaller tasks with deadlines along the way? Again, going back to speaking to productivity experts, you have tasks with hard deadlines, they're much more likely to get done rather than vague tasks that, oh yeah, that's on the list when I get to it. Even consider potentially even just putting it into your calendar and marking it as a hard date, blocking out time in your calendar to work on specific things in your business, time away from the normal client and the normal running of the business day to day. Also wanted to talk about a marketing plan. So the first thing, if you haven't started your business, the first thing obviously is probably going to be choosing a name. The main thing I wanted to talk about here is you need to be mindful of that. Is that name available? So when we say that, is it available as a name on the Australian Business Register? But also think about how you're going to market and position your product or service later on. So is the Instagram handle, the Facebook handle, and the website domain also going to be available for use as well? Think about similar varieties of your name. Is that going to direct to a competitor, or is that going to direct to something that maybe doesn't fit your brand, and maybe that's going to cause problems later down the track? And also consider, we don't want to be obviously stepping on anyone else's brand, because we don't want somebody else to come back to us later and say, hey, that's your brand is too close to mine. You're going to have to change, and that could potentially cost you tens of thousands of dollars, particularly if you've started branding things and you've got your logo everywhere and you've got products going out there. So that can be really important. So that's really important to have that wide think about it before you start registering and start ordering branding products with your branding on it. I've got here purpose again. So again, that's the purpose that we spoke about in the business plan. We restated here because the purpose should be our business purpose should be driving everything we do. So we restate it in the marketing plan, and we need to be able to communicate that in some way as part of our marketing plan and as part of our communication. We want to look at our target market. So our target market obviously is our ideal client. Who are we trying to attract to our business? Again, our value proposition. What is it that we do so well that's going to be the reason why the client or the customer that picks up the phone and calls us? We need to be thinking about that, and then we can then communicate it in our marketing. Our positioning. So again, where are we positioning in our target market? Are we looking to target affluent people? Are we more offering discount products? Are we targeting older people, younger people, gender specific? Is it athletes? Is it whatever it is? And then where do we want to position ourselves? And then obviously we then use that understanding to go, well, okay, do we need to do social media? Do we need to do direct marketing? Do we need to do something else? Promotion strategy. So that most likely it's going to be a mix of things, but obviously you've got things like social media, direct email marketing, direct pamphlets. You've got website options. You've also got traditional media as well. Business networking is something that Erin and I both do in our business because we feel that particularly for accountants, we need to be face-to-face because people want to be able to trust their accountants, see them face-to-face. So we do a lot of business networking as well. So that can be really important. Also in your marketing plan, always have a budget and stick to it. So know what you want to spend and really think about how much it's going to cost to really drive in the numbers that you need for your business. We also wanted to talk about key performance indicators. And there's a range of things that we want to talk about, but we want to make sure that we want to make sure that, say, for example, on social media or on website, that we get enough impressions, that we get enough, visitors to our documents. But then we want to also then turn those into leads, where a potential client then will call us to ask for our services. And then we also want to turn that into conversions. So there's no point having lots and lots of visits to our website and then lots and lots of phone calls, but then they don't turn into conversions. So we need to be monitoring the whole thing to make sure that our marketing strategy is working. It might be that we need to tweak things and try different things along the way to make sure that we get the best result. And I feel like I've been talking for a while, and now's a good time to hand back to Erin, I think.
Thanks, Paul. So yes, now we're going to be talking about the story in the numbers. So after you have developed your business plan and marketing plan, you're going to need to know how to read your numbers, and you can see how it all really does entwine with one another. Because knowing and understanding your finances is absolutely critical in running a successful business, and obviously helping you reach your business goals. Because whilst you might have goals in place that might not necessarily be financial related, or even if they are, it's always going to come down to the numbers, and understanding these will help you stay on track and track your performance and help you make informed decisions around your business. So jumping into the next slide, thanks, Paul. Just wanted to run through a few key reports that you should ultimately be running in your business. So you've got two up on the screen there, and that's your balance sheet and profit and loss. So quickly running through some key items on your balance sheet. So you can see here that you've got your assets. So your assets is basically anything that you own. So that will be, the money in your bank account, your accounts receivable balance, which is basically the amount of money your clients or customers owe to you. It's going to be any fixed assets, so if you've bought any plant and equipment, computers, motor vehicles, so anything that you do own. And then obviously you've also got your liabilities. So you've got in your liabilities, which is basically anything you owe. So you've got your credit cards, you've got your loans, and you've got any accounts payable. So if you have to pay your suppliers, this balance is also going to be sitting on your balance sheet. And anything else, so anytime it's bath time, anything that you owe is going to be ultimately sitting under your liabilities. That is your balance sheet in a whole. So you've got your assets, less liabilities, which will then equal your net assets, which is basically your equity, so the position of your business. So it's a really important one to be running and an important one to be understanding. The next report that we do have is your profit and loss. So again, some other key terms. So this is ultimately, as it says, it's going to be showing you how you're doing in your business, what's your performance of your business. So it's going to be showing you the bottom line if you're making a profit or a loss. So your key term in there is your turnover. So that's basically the income that you're earning, less your cost of sales, which we're going to jump into in a bit more detail in a moment. That will then equal your gross profit. So ultimately the profit that you're making on the products or services that you're selling, which then is going to help you cover all your other expenses in your business. So these are all your overheads, so all your other expenses that aren't directly related into earning your income. So these are going to be things like your accounting fees, your rent, marketing fees, all those, which then is going to give you that bottom line of whether or not your business is making a profit or a loss. But like I said, we're going to jump into cost of sales in a bit more detail, because this is really important to be making sure that you are understanding and you do have this correct. So a couple of really key items that we see on most cost of sales. So you've got your raw materials. So this one's usually the easiest one. So if you think of the most basic example of baking a cake, you're going to know you're going to need your eggs, your milk, your butter, your whatever it might be. That's really easy to understand. But you've got to start thinking about all the other costs that might be associated with making that product or providing that service. So you've got things to consider like your packaging. You've got things to consider about the freight. So how are you getting your products into your warehouse to make your raw ingredients into your warehouse to make your products? Are you then shipping off your products to your customers? Is there any motor vehicle costs directly relating to selling your products or providing that service? It's just a really important one to really understand and to be looking at. You've also got some staff wages in there. So again, if you start hiring employees and building a bit of a team in your business, you're going to have two different kinds of wages. So you might actually find that you have staff wages that don't actually relate directly to, providing a service or your product. It might be your bookkeeper or your admin staff. But there are going to be potentially wages actually resulting that will fall under cost of sales. So this is one that we'll go into a bit more detail as well a bit later on, but definitely something to be aware of and something to be thinking of. And even if you're not paying staff wages at the moment, so you don't have any employees yet, it's definitely starting to think about, well, what's your time and what's your value, and are you actually charging that on to your clients that you're providing your service or products to. So even if you're not physically paying yourself a wage as of yet, it's definitely something to be thinking of. Well, are you still charging that time that you're incurring? So moving into example, I might hand over to Paul to run through the examples we have for profit margins.
Yeah, I just wanted to. There's a reason why we're spending so much time on cost of sales, and it might sound a bit strange that it isn't just cost of sales. It's pretty obvious, but it actually isn't, and quite often isn't. And the reason why it's important is if you think about the Erin's example before with the profit and loss, it's the overheads should stay pretty much the same in theory, just regardless of whether you sell 100 units or 300 units or 1,000 units of whatever you're selling. So understanding the cost of sales then is going to give us a better example of how much do we have, how many units, whether it's hours of time or whether it's actual products that we're selling, how much do we actually sell to make our desired profit. So the example here, for example, I've got 100 units. I'm going to say that we're growing the best apple ever, and we're going to sell each apple for $1,000. So, and we're assuming we can sell 100 of them. We can make $100,000. The cost of producing this fantastic apple is $500. So we're expecting a gross profit of $50,000. So we set up our business and our business and everything we want to achieve around that understanding that if we sell 100 apples, we're going to make our desired profit and achieve what we want to. But then if we then run into the problem in example 2 where the cost of sales has gone up because let's say, for example, in the first example, we didn't consider the cost of the packaging and the cost of the delivery. And once we started the business, we started making sales, we realized that if we're going to sell an apple for $1,000, it better have some fancy packaging and it better be delivered on time. So that cost of sales has gone up. So now we've literally halved our gross profit before we've got even into our overheads. It looks like a pretty significant difference between gross profit in what we thought it was and what it was going to be. But we've seen plenty of examples where it's a lot worse and where businesses haven't realised that they're actually selling their product or service at a loss or pretty much break even, and therefore they're not making any money at all. So it really is important to understand what goes into cost of sales and to think about that, because as I say, as your turnover goes up, the cost of sales are going to go up with it. So keeping an eye on that profit margin is really important, because it's basically at the end of the day, it's going to ensure that you've got a business that can scale. So it's really particularly important if you are looking to grow and then potentially putting more employees on in the future to help you grow your business, and hopefully you're making profit on that, which I know Erin's going to go through in a bit more detail right now about setting the right price so to understand your value and so that you can make profit and grow.
Thanks, Paul. And yeah, if you do kind of want a bit more help in understanding your cost of sales, we're obviously here to help as well. But that is the most important thing to understand first before we actually get into setting the right price. So we're all in business to make money, so we do want to make sure that we are charging the right price to be making that money. So if I just address a few of these points on your screen here. So obviously the first and foremost is understanding the complete cost of what you're offering. So that's all back to that cost of sales that we've just gone through. The second we have here is understanding your value and getting paid for the time that you put in. So obviously if you do have an employee, you're going to be making sure that that cost of hiring that employee is included in your cost of sales. But what we do see time and time again is a lot of business owners that don't yet have employees not actually charging for their time. You might find that you're spending more than 40 hours a week on your business and providing a service to a client, but you're not actually seeing the dollars come in. And that's generally because you haven't set the right price to account for the extra time that you are spending on your business. So that's just going to put me into that last dot point of tracking your time. So whilst timesheets are not many people like to do, if you want to make sure that you are, understanding the exact time that you are using on your clients and on your products and services, this might be a really good idea to use just in the first instance, just to ensure that you are understanding exactly how much time it does take to produce these products and services. Because once you do understand all that and you have an idea of your profit margin, you can then obviously start by setting the right price, which I'll lead into an example now. So in the first example, it is a very straightforward example. So we've obviously now understood the cost of sales. So we're going to have an example one. We've come up with materials of $200. So we know for a fact that we're going to be spending $200 on our materials to produce our product. We also then understand that there may be some other direct costs, whether that's traveling costs, packaging costs, whatever it might be, that's $50. So that gives us a total cost of sales of $250. And again, this is a very high level example. So you'll find that you will have a much bigger breakdown of your cost of sales. But in example 1, we've got our cost of sales of $250. We then add on our profit margin and we set our price of $350. This now gives us a gross profit per unit of $100. So every single unit that we're selling, we are going to be making a profit on that product of $100. Now, if we look at example 2, we kind of go, hang on a minute, we haven't actually considered our own time. So like I said, we do see time and time again, a lot of business owners, unfortunately, they don't realise how much time they are spending, and they're not getting that value back. So if we're sticking on to the same example, we've got our $300 of materials and $50 of other direct costs. Now, if we actually do put in the time that we put in, this is at your charge out rate, and say we put in, my charge out rate says for this example $100, you'll see then that bumps up our total cost of sales to $350. So actually we're actually making no profit on any of our products that we're selling, which then leaves us with no money to then pay for all our other overheads. So it's really, really important to be understanding your time, because ultimately if you do employ someone down the track, you don't want to then have to be increasing your sale price to account for the wage that you are going to be paying to your employee. So it's really important to be understanding the value of your time. Paul, I'll hand this one.
Sorry, no, I was just going to say that I just think it's important. You know, obviously we've talked about that growth, that you know you want to be able to sell your service or product at a profit if you had somebody else doing your job for you. But it's also about, even if you're not necessarily thinking of growing, it's about valuing your own time. You know, what's the point of having all the stresses of extra stresses of running a business if you're then not making much more than you would if you were doing the job for somebody else just at an hourly rate. So we want to be making a profit. Obviously, we all understand that there's price sensitivities with your clients, and other people are going to be offering it cheaper. And that's where we talk about it's really important to understand your ideal client and your proposition value, so that you can sell at a higher price because you do it better than your client, than your competitors. So that's what I just wanted to touch on that. It's just really important to make sure you're valuing your time, because you're in business because you love what you do and you're great at it. So make sure you get paid for it, really. That's all we're trying to say.
Thank you. And again, if you do have questions around setting that price, we are obviously here to help. But once we do understand our cost of sales, setting our price, and we have a bit of an idea of what expenses are ultimately coming out of business, we say it's fun as accountants, but it's actually setting up your cash flow. So what does forecasting your cash flow mean? So this is where you're really getting to consider your budget on a monthly basis. It's actually a known statistic in a lot of small businesses that fail, and it's always usually due to poor cash flow, and it's not actually due to the lack of making a profit. So they usually say cash is king for business, and it's so important to be understanding your cash flow, and especially on a monthly basis. So if you're looking at that second dot point, there is identifying the cash point. So really understanding, if you invoice your client, how long does that client actually have to pay you? Sometimes if they're buying a product, it's instantly, you know, they purchase on your website and it's straight into the bank. But sometimes when you provide a service, someone might get 7 days, 14 days, 30 days. So that's 30 days you're waiting for money to come into your bank account. On the flip side of that is, when do you actually have to buy your materials for that product? So if you're making a product, generally you'll have to pay your suppliers first, then you'll put it up for sale, and then it might take a month for that product to be sold, and then they might get 7 days to give you the money. So it's just really understanding that cycle of when you have to pay cash out of the business and when you're actually going to be receiving money back in. It's not just down to your profit and loss, and not just the income coming in and those expenses coming out, but it's also all the other expenses. So if you have any loan repayments, credit card payments, and obviously your BAS and tax obligations. I'm going to jump into a bit of an example though. Again, this is a very high level example, but I just want you to get familiar with understanding cash flow and the bit of a difference it will have versus your profit and loss. So you can see here, you've got a few key terms that we've already gone through. So we've got our turnover, cost of sales, and profit margin. So we've estimated for the year, this is basically what we could call our annual budget. We've budgeted that we're going to earn $100,000 this year. Obviously that is the money coming in, but then we've also got some expenses going out. So we've already estimated what our cost of sales is, and that's $50,000. And then we've got some familiar overheads there. So we've got our annual accounting fees, our budgeted marketing fees. We pay rent of $10,000 a year, and we've estimated our other expenses to be around $7,000 a year. Obviously, though, with an annual budget, how often do you actually pay these expenses? So yes, there's going to be some scenarios where it's a once-off payment. So sometimes, you may pay your accounting fees once off come tax time. But for example, for this particular business, we're going to assume that income is usually pretty steady. Our accounting fees we actually pay on a month-by-month basis, which is great for our cash flow. And we're just going to jump in. So for example, if we say in July, it's our first month of the year, and we actually don't have any stock on hand to sell just yet. So we're going to be producing a product. We actually have to pay our suppliers for our materials a quarter in advance, so 3 months in advance. So we have to come up with $12,500. That's our cost of sales to make our products. Like I said, we then have some other overheads. So we pay our accounting fees monthly. Because it is our first month in business, we want to get our marketing plan up and running and marketing our product as soon as possible. So we're going to have an upfront payment of $2,000. We then have our usual monthly rent, and we've assumed that our $7,000 annual expenses is usually pretty around the same every single month. So we've got that $583 there. Like I said, you've got to consider all the other payments, so not just your expenses relating to running your business. We've also got a loan that we've had to help cover some of these startup expenses, and our monthly loan repayments of $500. So you can see here in the month of July, we're actually got a decrease in our cash of $16,000. Now, if we move into the next month of August, this is when we actually start selling our products. So again, we're assuming a pretty steady sales. This is going to be very dependent on your business and your industry. So you might find it can be quite seasonal, but for the sake of this example, we're just going to assume that it is quite consistent. So we've actually started to make some money. Now that we've actually sold some products, we've already paid our suppliers to make these products because they're already now on hand. We actually don't have any cost of sales physically leaving the bank account this month, but we do have our usual overheads. So we've got our accounting fees, still paying off our marketing plan. We've got our rent and other expenses. Again, we still have that loan repayment in, but you can see here now that we've actually made some income, our cash has actually increased for the month of August. So we're actually in surplus of $5,750. Our month of September is also the same. So again, we've actually, increased our cash by $5,000. However, in the month of October, whilst our sales is still consistent, it's now that time to pay our supplier again for the next coming quarter of $15,000. All our usual overheads, and it's also BAS time. So we've got to pay our September BAS, which is coming out. So you can see here, we've got our other payments of the BAS, $700, and our regular loan repayment of $500. So back in October, we're now back down, decreasing our bank balance by $9,000. Just really want to highlight the importance of understanding your cash flow. So you can see here, whilst you're familiar with the amount of income you might be earning and your regular repayments, how different the cycle might be in when your money's going out versus coming in. So it's important as a business owner to understand that October is going to be a bit of a hit in the bank account, but at least we know August and September is helping to support that month that's going to be a bit harder on the bank account. So it's just really understanding that on a month-by-month basis. And generally, our cash flows, you can predict it however far ahead you want, but to be as accurate and realistic as possible, usually we see forecasts for about 12 months ahead. And again, this can be a working document as things start to change, and as you are in business for a number of years, you'll start to notice trends. But it is, just really important to be understanding and actually forecasting month by month as you go, just because you'll start to see those dips in the bank account, and you just want to know that you are going to be supported by the money that is going to potentially be coming in. Bookkeeping. So it's not all about your tax obligations. So bookkeeping is unfortunately that something has to be done, but it is obviously helping you stay on top of all your tax obligations. So when it comes to BAS time and tax return time, but it's also helping you really understand your business. So because if you're doing your own bookkeeping, you're in your file, and it's really making you, it's putting yourself in a position to be making, smart decisions within your business. There is a number of softwares out there that can help you. If you are potentially starting up, you might say Excel is fine. It really does come down to the time that you're spending on your bookkeeping though. So you might say there's only a few transactions at the moment going in and out of bank account a month. It's pretty easy to do in Excel, so I'm going to leave it at that. However, if you start to find that you're spending quite a bit of time in Excel, it might be an idea to start exploring another software out there, which we will jump into a software that we usually do recommend shortly. just go back to one step is also if you should be engaging a bookkeeper as well. So I will be touching on Xero, but it's just really important. Okay, Paul. Just the question of, do I need to use a bookkeeper? So this is a question that we do get asked often. I think, again, it's all coming down to that time. So we will teach you Xero, we'll help you understand Xero, we'll make you experts in it. So you should be confident enough to be doing your own bookkeeping. But if you find that you are spending too much time in this area and you could be utilising that time in somewhere else in your business, that's when you can start exploring that option. But I definitely think it's worth starting off on a platform like Xero to begin with. So that does lead me into the next slide. Thank you, Paul. So there's obviously a heap of softwares out there. You can search accounting softwares and you'll probably find a dozen out on the market, but ultimately you have to choose one that's obviously right for you and your business. I do want to highlight Xero though, just because it is an accounting software that we do recommend as a firm. It's probably a more superior product, we do say, compared to the others out there. It's not just a great accounting software though, it can actually act as like a financial hub for your entire business. And it really does give you real-time view of your finances, and you can do that anywhere you are. So if you go for a holiday to America, you can actually jump into Xero and be invoicing, bookkeeping, not that you want to do that on your holiday, but you never know, payroll, reports and more. So it really does everything in there. And not only do you have access to it, we have access to it as well. So we can always be collaborating together, and it stops those annoying questions. Can I please have your income and expenses for the year? Because generally we can jump straight into Xero and get that. So it does make it a whole lot easier. But obviously there is a subscription cost with that. And setting up Xero, that's something we can help you with. We obviously do make sure, because we are so familiar with it, that it is set up correctly and it's set up ready for you to use from the get-go. And we also do train you as well as part of that. So the idea is that you can walk away being confident and use Xero without any questions, hopefully. Because they do actually say 78% of users reported improvements in productivity since using a cloud software. So just food for thought. Then that leads me to AppStack. So obviously Xero is a great accounting software and great for your own business. Like I said, it does all your invoicing and whatnot. But if you ever do get to a point where you go, it's just, there's something I need more of, usually there is a problem. There's always generally a solution to help solve that. So just a few problems you might have on the screen. You've got point of sale. So I'm sure we might be all familiar when we go to our markets or even some of the retail stores these days, you'll use that little white box called Square. So there's a whole lot of different app solutions out there for point of sale, for example, that will help you get paid that bit faster. Same with your payment services. There's a lot of payment services these days that you can actually integrate with Xero. So when you send out your invoice, there's actually a link on that invoice and say pay now, and it directs them to either put in their credit card details. They just make it that bit easier for you to get paid. And generally, if it's easy for the customer, you're going to get paid faster. There's also other solutions out there for inventory management, job management, and it is usually very industry specific. So the common example we have is if you think of construction under the same bubble, a software we might recommend for job management for a builder will be a lot different to what we recommend for an electrician. So there's a whole lot of apps out there that do integrate with Xero, and it is about solving a problem that you have. But again, there is that many out there. So if you do have any problems that you are finding, do ask the question to us and we can usually find an app that works the best for you and your business. But the considerations I am going to just quickly touch on, it's all about time. So you want to be saving time with an app. It's not about making your own time. I mean, you know, it's not, you don't want to be spending more time in a software. It's meant to be it's meant to be easy. So it's an ease of use, accuracy. So it's a huge one. So and the power of numbers at the click of a button. So for example, if I was to come to your store and say, do you have this shoe in a size 7, you should be able to quickly jump on and quickly see quickly within 30 seconds that yes, you have that in stock, rather than having to go back through your Excel or out the back or whatever. So it's really about making it as easy as possible for you to use and as accurate as possible as well. So like I said, there is literally 1,000+ apps that do integrate. So we are here to help. If you do find you need something that helps track your time on certain projects or certain expenses, that is something that you can always come to us with the problem. Otherwise, in Xero, there is actually an app marketplace where you can search what you want, and usually they'll come up with a heap of suggestions as well. So just letting you know that it is out there. And I think this leads me to Paul for the next segment of the webinar.
Thanks, Erin. Well done. You can have a bit of a break there now for a moment. So I just wanted to quickly touch on legal and HR side. Obviously, I'm not a lawyer and I'm not a HR expert, so I'm not even going to try and pretend that I am at all. But I just did want to highlight these because it's something that some business owners, when they start out, they just don't think about some of these items, and they really are important. So just on insurance, understanding that work cover for your employees and potentially even for yourself is going to be necessary. Think about any business that deals with the public, which is pretty much going to be every business, is going to probably need public liability insurance, your general business insurance, such as for your assets insurance, for assets, your motor vehicles, your plant and equipment, property, if you're working from a property, even business interruption insurance, things like that is really important. Personal insurance, and even just making sure your family's covered as well. So if something happens to you, so personal insurances such as income protection, life insurance and things like that. So certainly personal insurances, you can go see a financial planner. We have a financial planning arm, so if you're interested in that, you can have a chat to us and we can make sure the right people speak to you. For business insurances, we would recommend using a broker. Just make sure that you're covered. It's insurances. Unfortunately, most people do see insurance just as an outgoing cost until you actually need it, and then you're like, oops, I really didn't have enough cover, and that can be that really old moment that can really make or break a business. So we definitely recommend you use a broker, and absolutely if you need a referral or would like a suggestion of someone to use, please reach out to Erin or I, and we can certainly refer you to people that we've had a good relationship with in the past. Also protecting your work, and I'm certainly not going to take the place of a lawyer, but certainly think about trademarks potentially for your logos, your branding and your words is really important. Patents for particular innovations or inventions or processes that are specific to you that you've developed, making sure we protect that, and also copywriting for art and writing and computer programs, all these sorts of things that basically if it's so important to your business and if you've created it, then you certainly want to look to protect that so nobody can sort of take your hard work away from you. So definitely want to speak to a lawyer in regards to that. So I know obviously additional costs are a concern, but we want to make sure that we start things off on the right foot so that when your business does go really well, that you're protected. One more quick comment that I wanted to make is on legal requirements. There's literally hundreds and thousands of licenses and registrations required by business. It's actually quite crazy the amount of red tape. This website here, I recommend you use. Plug in what you do, plug in the location, and it'll give you all the potential registrations and licenses that you need to consider. That's the best place to go. That'll give you a complete rundown, and it'll probably shock you about how many license and registrations you should actually have. So, but definitely recommend you check that out. And I'll throw back to Erin for our last topic.
Awesome, and yes, it is our last topic, and we are going to go through hiring employees very briefly, because it is usually a question that when you start growing your business that you might need additional help come on board. So the first thing is, when you're hiring an employee, you do actually have to register for pay-as-you-go tax. So that's basically, if you remember, as an employer, you get a portion of your wage withheld from your employer. So this is just registering with the ATO, letting them know that you are hiring employees. You will be withholding some of their wage for taxes, which you will then be handing back over to the ATO when it's BAS time. So this is something that you do report on your BAS, which is why you do need to register it with the ATO. With the ATO, they also have introduced single touch payroll. So this is coming within a few phases, but in simple terms, you're basically just reporting every single time you're paying your employee what they're earning, what tax you're withholding, and what super you're paying. So rather than them receiving the bulk of the information once a year, formerly known as group certificates and payment summaries, they just ask that this is done basically on a weekly basis, if that's how often you pay your employees. But probably one of the important ones is superannuation. So you do actually have to pay your employees super. So at the moment, the rate is 10%, but it is going to be gradually increasing over the years. So if you're paying your employees, say $500, you do actually have to also pay an additional amount of 10%, so $50 into the nominated superannuation fund. So there is softwares, like I said, Xero, that do basically all of this for you. So it will actually calculate the tax, it will calculate how much super, and actually help you pay the superannuation. Super is due on a quarterly basis, so it's actually due on the 28th of the following month of the quarter. So for example, now that we're in June quarter, my super is actually due on the 28th of July. You can obviously pay this as frequently as you want, but as long as it's paid by the due date, that's obviously the most important part. When it comes to employees under certain awards, pay rates, etc., like we said before, we're not going to pretend we're a HR specialist or anything of the sort. Fair Work's actually probably a really good place to start. So definitely just obviously Google up Fair Work, put in the industry, and it usually gives you a whole lot of information. If you want to go that step further, because I know the Fair Work website can be a bit tedious to understand, you can actually also engage with a HR specialist. So we've got Happy HR there on the screen just because they are usually seen as an affordable way to go. But there's also other HR specialists out there that can help you with contracts for employees and rates and all that. I'm going to also quickly touch on contractors versus employees. So as you know, we're obviously touching on employees, but there's also subcontractors and other contractors out there. So the bit of a difference. So for example, with a contractor, it's more just an expense. They'll actually provide you with an invoice with their own ABN, so they're running under their own separate business. A really important one though is that sometimes the ATO can actually see them whilst they are a subcontractor in your business. They can actually view them as an employee for tax purposes or for superannuation purposes. So this means there is a whole lot of ruling, so I won't get into too much detail, but at some point, if say the contractor starts to work with you 40 hours a week, the ATO might actually go, hey, you should be paying them super. So you might be actually obligated to pay superannuation on the contractors. There's actually a really good ATO link. So if you ever think you are using a contractor quite regularly, if you just Google ATO contractor versus employee, there's usually a checklist that you can go through, which the ATO will then give you that bottom line. Yes, you should be paying their super, or no, they're just a contractor. Also apprentices and trainees. This is another great avenue to go down if you are looking at hiring employees. Obviously, when you're hiring an apprentice and trainee, usually they don't have the experience. But the flip side is that you can actually train them the way you need to or the way you want to, and usually their rate is obviously a bit less than say someone with years of experience. Another bonus is that actually the government and ATO/government actually usually give quite a number of incentives with hiring apprentices and trainees, where you actually get a portion of their wage either reimbursed or something of the sort. So it's definitely an avenue to look at if you are hiring employees. I was obviously an apprentice/trainee at one point, so it is a great way to go down. And like I said earlier with Xero, Xero does help basically automate a lot of the hiring, well, the employee process as well. So if you are on accounting software, it's just that one step easier for you. And then, Paul, how can we help?
Oh, that's me. So we're about to finish up now. So we haven't had any questions come through, which is fine. Hopefully that means that we provided great content for you all, and we've covered everything. I'm sure we haven't covered absolutely everything you could possibly ask about starting a business. So please feel free to reach out if you've got any questions. How can we help? So we've put a couple of things down there. So certainly the business plan point of view, from $1,000 plus GST, we think that's really great value for businesses to get off on the right foot. We offer quarterly coaching it says $450 per month there, which is correct. So, and it's for a quarterly meeting, but we also keep in contact, regularly through the quarter as well, which is why it's that per month sort of charge, again, an ongoing subscription sort of basis. And we find out our clients can achieve great results by having us regularly check in and help them along the way. We obviously also offer the normal annual compliance and ongoing compliance services. So if you're interested in our services, please reach out. We can offer a 30-minute complimentary meeting to discuss how we can help you and your businesses get off on the right foot and continue and grow. And ultimately, I mean, what you'll find if you come on for an onboarding meeting with us, the first question we ask is, what are your goals and what do you want to achieve? And that's the way we approach it, so that we can help you achieve your goals. So please feel free to reach out, and any feedback, we welcome it. Mainly positive, but no, even negative. And yeah, any questions? Do we have any questions? No, we don't, I don't think, but thank you. Again, please feel free to reach out. I'm Paul, and my email is paul@smartbusinesssolutions.com.au. Aaron's is pretty similar, it's just Aaron instead of Paul. Obviously, we're available by phone as well. Please feel free to reach out. We love talking to business owners and helping them achieve what they want to do. So we really love it. So we'd love to hear from you. Thank you.
Just a quick one, Paul.
What do I do? Oh, we've got questions, haven't we?
We actually do have a question come through.
Sorry. I got too excited. Great. What's the question?
Here we go. So can you explain the best structure for the sale of a business and to avoid capital gains tax, so the exit plan?
Yeah, that's getting into really specific. So if you're thinking of particularly selling, then definitely give us a call and we can go through your specific example. If you are a small business, there are really great options essentially for not, I was going to say avoid, but that sounds like a bad word, to minimise your tax. So under the small business structure, look, it's a really complicated thing to go through, but regardless of your structure, you should be able to get a lot of it tax-free if you've been operating a small business. But it's going to depend a lot on what you're selling. So whether you're selling shares in a company, whether you're selling the actual business itself. I feel like I'm not really answering a question, but it's really because it is such a specific question. Capital gains tax is a very complicated area. It's something that I would definitely recommend you get advice on, really. But it's just one of those things that we have to. I mean, we literally did one the other day, didn't we, Aaron? And we've done a couple recently, and it's quite a lengthy piece of advice that we need to go through and make sure we're ticking every single box. I think that's pretty much all I've got to say. Sorry I couldn't be more specific. Hopefully that helped you, but please reach out if you've got any specific question, because it's really a client specific question.
Awesome. And do we see any other questions in chat box? I don't think we do. No.
Okay. Well, I think we can. I'm not going too early this time. So thank you everyone for attending again, and reach out if you've got any additional questions. Thank you.
Thank you.